Hello. Now, it's a quiet start to the trading week with the May Bank holiday on Monday, so things really start to kick off later in the week, leading to the all-important US jobs report on Friday. Now, joining me is our senior market analyst, Jasper Lawler. We're going to take things a little bit differently today, first talking about indices, then Forex, and then moving on to wrap up the week ahead with commodities. Jasper, thank you as always for joining me. Now, this Saturday marks Donald Trump's 100th day in office. We've seen Trump trying to score early wins in terms of healthcare and tax cuts. So talk me through the effect he's had on US stocks.
Well, we did write a report specifically on Trump's 100 days. You can see it on the website. The general idea there was that actually markets have continued to move higher, but actually the sectors that you would expect to benefit the most from Donald Trump have pretty much moved in line with the S&P 500 or the Dow. Mm-hmm. And actually some international stocks, when you compare the DAX, for example, with the Dow or the S&P, it's actually outperformed. Mm. And so if Donald Trump was the be-all and end-all of what's driving markets higher, you would expect US markets to have outperformed. They actually haven't. So I think what we can conclude is that the stock market rallies are alive and well, but Donald Trump's contribution to it is a little bit more mixed at the moment.
Okay, you mentioned DAX there. So what can you tell me about the movement in DAX and FTSE, especially with the looming French and UK elections coming up?
Well, it was a big week for the DAX last week because we broke to record high territory. So 12,500 on the DAX is a big level. We took it out. And so the question is, can that break sustain? The big impulse that it had was from the French election, as you said, from the first round. The conclusion from the first round is pretty much a shoe-in for Macron to win. He's more of the established candidate, establishment candidate, and so Marine Le Pen, the big threat to the euro, to the Eurozone, to any countries within Europe, including Germany, is less likely to win. So assuming that result continues through to the second round on May 7th, then I think that's a positive influence for the DAX going forward.
Okay, that leads me then nicely to talk about the euro. Now, the other election on everyone's mind is the French election, the final round, as you discussed. How is the upcoming final round, which is taking place as voters vote on May 7th, how is that going to affect the euro in the lead up to next weekend and also post-election result? And also, what are your thoughts on ECB President Draghi's comments that we saw this week in terms of inflation and growth?
Well, so they're the two main contributors towards the moves in the euro at the moment is the undoing of political uncertainty. The euro was looking pretty soft going into the year. It saw a massive rebound on that French election result. It's pretty much broken out of its yearly range. And so against the question of what can sustain that, we had mixed messages from Mario Draghi last week. That the ECB is the other part of this story with the euro. He talked up the growth prospects in Europe, rightly so, because the data is pointing to a big improvement in Europe. But even though inflation has been quite strong, the ECB is still a bit reticent to acknowledge it, basically saying it's just down to oil prices and it's not something they should change policy for. What we're all waiting for is the big hint from them that they're going to taper the bond buying maybe quicker than previously suggested. Mm-hmm. They haven't gone that far yet. My feeling is that they have to at some point, and probably once the final round of the French election is out the way and they know for sure that political risk isn't there, then they've got maybe a bit more room to actually suggest to the market that the QE isn't needed anymore, and that would be a positive force for the euro.
Okay, so moving on to sterling actually in regards to euro, pound and obviously pound dollar. This is the first time we've spoken about the snap UK elections together, taking place on June 8th. It does seem that growing expectations of a Tory landslide, it seems to be lending to support to sterling. So what levels do you think are quite interesting to watch at the moment?
The massive one in sterling is 130. That's the big kind of round number handle that everyone's watching. We came very close to it on Friday. We're right in that vicinity. And the question is whether we can hold and break it. My sense is that eventually we can, but there's going to be people who are still fearful about the effects of Brexit on the UK using that big 130 level as a place to enter short the market after a big rally. And the market has been rallying after the UK election on the assumption that Theresa May is going to have an easier time with a majority negotiating with Europe. I think, probably net, it's a good thing for the Conservatives to have a bigger majority in terms of markets. Mm-hmm. Typically, the Conservatives are more market friendly, more business friendly. But I don't think she's going to have a good and easy time with these EU negotiations. And I think the majority is probably going to have minimal effect on how successful we can be with the deal. And so that will, at some point in time, be, to me, probably a cause for another flush lower in sterling. So it's going to be, we're still kind of generally positive on the UK, but it's going to be a choppy road. And the Brexit is always going to be lingering there as a point of uncertainty and allowing the market to sell off.
Yeah, still choppy times ahead for sterling. Moving over to the other side of the Atlantic, we've got two high-profile events. We've got the Fed meeting taking place on Wednesday, and of course we have the US jobs report on Friday. What are market expectations at the moment for both of these events?
Well, it's been interesting with the dollar has almost played a bit sort of second fiddle to the pound and the euro with all the kind of political events that have been taking place there. So the dollar's been up a bit against the yen, which is more the safe haven, but it's been down against the pound and the euro. I think that just reflects a bit of uncertainty about what the Fed is going to be doing in terms of its balance sheet. So that was the big thing that got thrown up by the Fed minutes, was that they said they were going to start looking at shrinking the balance sheet towards the end of the year. But then the inference being that they would maybe pause on the rate hikes. So now the rate hike, the number of rate hikes this year and next is a bit less certain than it was. And that's given some pause to the dollar. So if they give more details on that, that will really determine the direction of the dollar. It's pretty unlikely the Fed's going to make any change to policy. Yeah. I think that's probably going to come in June. I would expect them to sort of signal that June is a likely date, very likely so. And so the big thing is going to be about that balance sheet if they discuss it.
And what about NFPs on Friday? What kind of expectations is the market looking for?
Well, I mean, I think we're at a point now where the Fed has pretty well signalled what the reason NFP is typically important is because it gives us an idea of our interest rate. Exactly, yeah. Exactly. And the NFP has been so fairly consistent in that sort of 200,000 job creation range that even if there is a slight disappointment, sure there can be a short-term sell-off, but
unless there's a massive surprise over the longer term, then we kind of know it's a done deal what the Fed are going to be up to.
Exactly.
Fair enough. Just to touch on commodity markets before we close today's week ahead, talk me through some of the interesting levels we're starting to see in our two traders' favourites. It's gold and oil.
Well, so the oil market, the big date to keep in mind, and we'll be covering it in more detail in later videos, will be May 25th. That's the next OPEC meeting. But it's interesting, the reason that oil got a slight pop, we're talking about Brent, got a pop off $51 a barrel last week, was because OPEC members started to, I think it was the chief of OPEC, sort of signaled that maybe they would actually hint to whether they're going to extend the output cuts before that May 25th date. So I say that's a big date in mind. It may not be. If they pre-announce it, then suddenly May 25th is just a formality. Yeah. And so that chance of pre-announcing, that idea being floated out there, as dubious as it is, and as not a point of fact whatsoever at this point, still it was enough to lift oil off its lows. The reason oil's been slumping, the reason it's down at 51 in the first place, to my mind, is that the market's losing patience with OPEC. They want to see these cuts extended because at the moment they're not working because US production's increasing, and so the oil market's still there's still a supply glut.
Yeah, of course.
Gold. Well, the scary news for all of us for multiple reasons last week was that there was talk of I think Donald Trump used the word massive war with North Korea, who are a nuclear power. So, understandably, people are using gold as a protection from that. Safe haven. Exactly. So at the moment, 1260 has been a pretty big level of support. We highlighted that in a snapshot video a while ago, I think. That gives way to 1240 is another series of lows that could support it, but it looks 1260 maybe could be the level that sees the kind of longer term uptrend in gold resume again.
Okay, Jasper, thank you very much as always. That's all for today's Week Ahead. Don't forget to connect with us on social media. Subscribe to our YouTube channel so you can always keep up to date. And Jasper will also be doing a webinar on Tuesday following the May bank holiday on Monday. So we'll give you more details about that in client emails and so on and so forth. But for now, have a lovely weekend and goodbye.